Good mid-morning, everyone. It's not such a good mid-morning for the stock market. Today, we're looking at risk off day, and I think it's because it's a COVID on day. It's been COVID on for some time as the wave of infections seems to be increasing across the country and certainly globally in certain places. Dow's down 500 right now. S&P down 1.5%. Dow's almost down 2%, just 1.9. And even the NASDAQ that was up earlier today is now down 0.75%. So VIX obviously spiking up today. Can't leave the VIX out of the picture. It was trending down, which doesn't really make sense to me. However, we know now that that volatility is inherent in these markets. Plain and simple, it's not going anywhere. We can see that today. Now, the interesting thing about today, the interesting thing about the risk off today is all of a sudden, I think the powers that be, investors, including retail, are scratching their heads at have markets come too far, too fast, as we focus again on certain cities perhaps threatening to lock down, beaches being shut down, parks being shut down, just as certain things were opening up, including gyms and salons and some other places. So now we're seeing a reversal in some major cities of opening to closing. And that's been the case for at least a couple of weeks now, and the markets have shrugged it off. NASDAQ's made new highs. What does that mean? It just means that today is a different sentiment day. And I believe the reason we're seeing this today is the markets have again come pretty far, pretty quickly. And the question now is, well, with United Airlines threatening perhaps as much as 36,000 layoffs, with Brooks Brothers declaring bankruptcy yesterday, with Wells Fargo claiming going to lay off. We don't know how, we don't have a number yet, but probably in the thousands. I think investors are starting to question whether or not the numbers we've seen in terms of better number, what seems to be better, fewer people lining up for initial unemployment claims, lower continuing unemployment benefits numbers. And is that flying in the face of what's happening since those metrics lag? Are we about to see another spike in unemployment, perhaps on the more permanent side? So business folks hiring back is terrific, and employment picking up is terrific, but net, if we're going to see more jobs go offline, more jobs, more workers furloughed, that's going to start to change the thinking that no, perhaps we're not out of this. Speaking of jobs, speaking of claims, we got the initial unemployment benefit claims number this morning, and that came in at 1.314 million folks signing up for unemployment benefits. That's down from the estimate, which was 1.375, so down slightly. Continuing unemployment claims was 18,062,000. That's down certainly from the previous week's 19,290,000, and coming in this week at 18,062,000. That's lower than the estimate of 18,800,000. So better numbers for sure, but is the market now looking at those better numbers and questioning how long they're capable of lasting? I believe so. So we're seeing a risk off day because we're seeing a COVID on day. We're seeing perhaps unemployment stress, and investors are trying to figure out what's going to be the next stimulus effort. Is it going to be fiscal? It's going to have to be fiscal because the Fed's doing everything they can already, shy of buying equities. There's not a lot more the Fed can do. Perhaps take rates negative. They said they don't want to do that. There's no need to. But really, if the market dips here, and this is not even a dip, this is nothing. This is just a little bit of profit taking. And if it turns into something more, what's meaningful? Is a 2%, 3%, 5%, 7%, 10% dip going to freak out the Fed? It's going to freak out the politicians. What is it going to do? Is it going to freak out investors? Are they going to start selling? Is this going to be the beginning of the reversal of this really amazing rally off of the lows, up more than 40% off the lows? Nobody knows. And right now, there's no reason to believe that the rally's over. This is really out of nowhere, seemingly, because there was no news that really knocked the market down. There was nothing in particular that investors could wring their hands at and start to sell. I just didn't see anything. I don't know that there's anything out there that I'm not picking up on. If any of you have any thoughts, ideas, read anything, see anything that I don't see that would be weighty enough to knock the markets down, I'd love to hear what your thoughts are. So here we are, down got 450 points in the Dow, 1.74%, S&P down 1.36%, NASDAQ down, we'll call it 0.2%. And so far, really very orderly. The volume has been light, and it's been light on the selling. It's been light on both selling days and on buying days lately. It's typical of summer. And also, we know that in summer, and typical of the summer, when you have light volume days, you can also have very spiky days up and down because there isn't a lot of volume. And it doesn't take a whole lot to move markets if there aren't a lot of players, if there's not a lot of liquidity. If the bids are thin and the offers are thin, it's very easy to move stuff up, take offers, or hit bids, and knock stuff down. So there are times like this when traders will try and move markets. So if you're big enough and you've got enough capital behind you, and you want to try and do something in a particular stock or a particular ETF or in a sector, you can in the summer. It's a lot easier to try and move markets by hitting bids, taking offers, and trying to make something happen for your position. So is that happening today? No, this is just, to me, a reaction to probably the fact that investors maybe are questioning the resiliency of the rally based on a lot of companies laying off, furloughing, and we're just heading into earnings season. And if we start to see some of the numbers, we're going to see the picture painted for us, and it's going to be quite a mixed bag. We saw Walgreens Boots Alliance came out today. They took a $2 billion cash charge based on coronavirus. So I think we're going to see other firms take hits based on COVID-19, and it's probably the best time to do it. Why? Because if you're going to take anything, you take it now when the market's going to forgive you for taking it because they understand. You don't take big write-offs when things are supposed to be good. You take them when they're supposed to be bad, and people expect you to take them. The stock gets hit and will probably bounce. Walgreens is going to take a look at that graphically, is getting hit today pretty hard. Not unexpected when the numbers came out worse than expected in terms of earnings, a loss versus a gain a year ago. And the only good news for Walgreens, I think, cutting about 4,000, they're planning on cutting about 4,000 people from there, and obviously took that $2 billion impairment charge. I think cutting is a good idea. What was good news is revenue was up slightly year over year. So that's a decent positive. You got to take that away. If revenue had been hit really hard, I would question whether I would have any interest in Walgreens Boots Alliance. But that, I think, makes sense. They suspended their share buyback program. Again, makes perfect sense. So far, the dividend remains intact. I didn't say anything this morning on the dividend. And so, well, I'll look a little further into that, but I didn't get into the earnings numbers. I just had a cursory glance at them, and I'll take a hard look at them after the close. So we're going to talk today a little bit about some of the earnings that are coming up and what the stocks are looking like and what the market may be reading into. And part of what it's reading into is bad news in Wells Fargo. Wells Fargo going to lay off a lot of people. Wells Fargo was, in my opinion, has been bloated in terms of staff for years. They're also among the highest paying of the big banks. So long ago and far away, they should have cut. And that it took them this long. Hopefully there's new management coming in and making an effort to do the right thing, which haven't been done for a long time. So I see Peter here is asking about Walgreens, CVS, and Walmart adding in-house primary care centers. Yes, and that's a good idea. And that's the move that I've expected them to be more aggressive in opening up in-house care centers for years now. It surprised me that they haven't done it. Walmart in particular has led for the most part, which again surprises me because I would have expected the pharmaceutical companies to partner up with the likes of Walgreens, Boots Alliance, with the likes of CVS. I would have expected healthcare companies to work with them also in order to screen patients and do primary, easy primary care stuff in those kind of environments. It makes perfect sense. But they're a little late to the game, but that's a good thing. So Shelly is asking, hi, Shah, thoughts on the leveraged daily ETFs, SPXL and SPXS. We'll take a look at them. I play them rarely, Shelly. If I do play them, I play them pretty much for day trades. And I've said many times when it comes to leveraged funds, they're great if you're playing them from a day trading perspective. And if you get a multi-day run in the direction you're hoping for, then they're great. But I like to take my profit. So if I get into something like SPXL or SPXS or any of the leverage funds as a trade, because maybe in the morning I don't like something and I want to just really leverage up on a position, then yes, I will do something like that. If I, at the end of the day, have a big profit, and I think the market it ended on a weak note, lows of the days, and I don't like some of the other things I'm seeing, I will hold a position overnight, hoping for an extension the next day. It's not that often that I'll hold a position, a leverage fund, more than 3 days. Usually, if you're in the right direction for 3 days, you've had a heck of a gain. Me, I take my profits because usually there's always some reversal at some point, and the minute you have that reversal, you're pretty much done with the trade. So we'll take a look at those graphically, though, and we'll see what they look like right now, see if if there's any resistance points that they're at. If they break through those, then those might be interesting spots. If you're in already, good for you, Shelly. It's not a bad place to have laid some groundwork for the rest of the afternoon if markets are going to continue to sell off. Anything gives. Again, we're not in any dire. There are no dire circumstances here that are driving markets down. Nothing has happened that we should be overly worried about. This is just some profit taking on, I believe, on unemployment news and the fact that several firms have declared they're going to furlough workers. So that's what's giving pause here. Couple more questions. You're welcome, Shelly. Walter, any idea on Costco for next week? Yeah, we'll take a look at Costco, Walter. I like Costco. I like only a handful of the big box stores. Costco is one of them. I'm a big fan of Target as far as big box, Walmart, of course, but Costco's up there too. So I'm not a fan of Kohl's. A lot of folks I know like Kohl's. They haven't performed, in my opinion. And we'll take a look at that too. Just to keep some perspective, but we'll take a look at the other big boxes. TJ Maxx has done well too, TJX symbol, so we'll take a look at that. But we'll have a quick look at the big boxes. Again, they've done well for good reason, because they're discounting policies, because they're low prices policies, and because it's a lot easier to go shopping in one place. And Walmart's doing a lot of terrific stuff in terms of delivery and in terms of being able to pick up at the locations. They're just they're doing a lot. They're being very aggressive because they are forced to fight with Amazon, and frankly, they've done a much better job than I would have imagined. And so, you got to credit the management. They're just super at Walmart. All right, Ken, I'm going to try and hit these questions. So before we lose, I'm going to go back to the bottom. Peter, surprisingly, gold down 14 today. Thought it would go up in a market down. Yeah, Peter, that's. We'll take a look at gold. I've been talking about gold because a lot of you folks are asking me about gold. I've said for some time now I like gold, and we own gold in one of my subscription services. We own GLD, and by the way, I still think there's higher to go. That pop up over 1,800 was, for the most part, unexpected by a lot of people. I think we've been thinking it's going to happen here. We've talked about it happening, and certainly we've seen it happen. So. Gold probably has more to go. Why is it off today? The only reason it might be off today is maybe just selling across the board. People are taking profits, and you've had a heck of a run in gold, so why not take some profits if there's a little period of profit taking here? If we get any really bad news, again, I don't know what's motivating investors to take profits today, because really there's nothing that's so overwhelming that we have to be worried about. It just malaise perhaps, and some other stuff that I addressed earlier in terms of more workers being furloughed, and people looking at the COVID on and thinking, oh boy, maybe we took this laying down, and then it continues to be a problem. But markets have rushed past it, over it, as if it hadn't been a problem, and maybe now they're digesting some reality and taking a second look. Makes sense. But if any of you see anything out there that I missed this morning, let's hear from you. I'd love to hear from you. So we'll take a look at gold, Peter. Ken's asking, what are your thoughts on buying calls in the money 3 to 4 months out rather than out of the money? I like both, Ken. Depends on the stock. And also obviously depends on the premium. If you're buying in the monies, you're going to have you're paying less premium, relatively speaking, most of the time. There are some times when you're paying as much premium as you're paying for out of the monies, where there is no intrinsic value. So I always take a look at that. If they're relatively cheap in terms of the premium above the intrinsic value for in the money, yes, I will play them. But it also depends on the stock and what kind of move I want. If I think if it's going to be a slow, steady move, and I'm going out 3 to 4 months, and I'm going for reasonable gain, and I want to have protection on the downside, yes, I like in the monies, because they're going to move more closely to the stock. However, you're not going to have the big gains. So you go out of the money. If it's 3 to 4 months you're going out, I expect to see about a 10% gain in the stock if I'm going 3 to 4 months out of the money, couple of strike prices. That I have to expect that kind of gain. And I expect it fairly soon. That's why I'm going out of the money couple months, give myself that time. I'm hoping I don't need it. So I do play both. It depends on the underlying instrument, what it is, and what my expectations for volatility are. But I do like both, and there's a time for both, Ken. Walter's asking, any ideas on Costco for the next week? We're going to take a look at that, Walter. Tommy, WEX, short term, 1 to 2 weeks. We'll take a look at WEX. We got Sam asking, hi from New York City. Question. Hi, Sam. How is this New York City? How are you making out in New York City? My goodness, I got a couple of pals over from New York City. They said it's just been strange, to say the least. Hope you're making out well there. SKF. We'll take a look at SKF. And let's get to a couple more. Shelly, you're welcome. Ruby, Fossey's plan of stringing it out to get herd immunity seems to be working, or is it going faster than he wanted? I don't know how to answer that, Ruby. I think he's a solid and sensible voice, and I know he knows his stuff. there are issues. If you dig deep into Dr. Fauci's past, there are some issues there, and I don't know that they're a problem, but there are some politics at play there. He doesn't seem to be playing politics now. But how we've gotten into some of his positions are there's an interesting history there. So the idea of now herd mentality and herd immunity, is it working? I don't know. I don't know that we know enough about it, and I don't know that Fauci knows enough about this virus. We're finding new things out seemingly all the time. So I don't know that we understand if herd immunity is even going to work, because we don't know that if you have the antibodies, so you did get it, but you had no symptoms, and it's present in terms of antibodies. Okay, are you out of the woods? No, we don't know that. You could be. Let's hope you are, because that would be great. But we don't know. This virus might come back. If you have antibodies, it's in your system. Okay, your body has fought this virus and won. Does it mean it has won the battle or the war? No. This is the problem that I have. We don't know what this virus is capable of. So I am concerned for anybody who has antibodies, because we don't know what we don't know. I mean, I'm hopeful that if you have the antibodies, it means that you fought it off and you're fine. Kids, we know that when this started, really in February, started talking about it in March, and nobody thought, not nobody, but few people thought that young people were susceptible to this. And we find out that's absolutely not the case now. So again, we don't know what we don't know, and that's frightening, at least to me. So, Ruby, I don't know how to answer that. Peter's asking, Walgreens, CVS, Walmart adding in-house primary care. We're going to talk about those graphically. And let's go take a look at these charts real quick, because I want to, markets, making a little bit of a turnaround here, but here we are midday, which is often what happens. We're going to see a pickup of activity, round two again. That's typically what we see. And then we see that activity sometimes pick up into the close, because we know that pretty much early in the morning at the open, you got a lot of retail activity, a lot of positioning. And then you've got markets sort of fade out around 10:30-ish. And then you start to see things pick up a little bit again at 2. So between 10:30, 11, and 2, oftentimes the market will drift, and there'll just be a push me, pull you kind of battle for whatever interest there is, upside and downside. And usually the volume is so light. So it's not often that during the middle of the day we get dramatic moves that are sustainable. We can see dramatic moves, and they can be reversed because they're usually on thin volume, especially in the summer. So right now we're seeing a little bit of a comeback for the markets. Dow, that was down almost 2%, is down about 1.29. So give you some reference there. So let's take a look at all of the culprits that we'd like to talk about. And if I'm going to start with the indices, because we always like to take a look at the majors and see what we're looking at. Okay, Dow Jones Industrial Average. I have this up for good reason, because we're looking at this sideways action, which we have talked about. So here we are in this sideways action here, and we had obviously this big breakout, which is this kind of an island on its own. What's interesting about that is that was a big break, huge break up through the 200-day, a lot of excitement, and then it came to naught, collapsed. And this, to me, is dramatic. After seeing this great up move, to see this and this come right back down in such dramatic fashion, on some reasonable volume, by the way, wasn't exactly healthy. We did pierce the lower channel marker there and that uptrending channel. So we have managed to bounce along it and get above it. Now we have broken down, and here we are in sort of a no man's land, trying to consolidate. And if we were to extend this line here, we can see this is pretty much where we're working at now. We're working in between this channel here, and we may go sideways for a little while looking to consolidate. If we come down to the lower bound of that sideways channel and we're well outside the uptrend channel, then we break that, then we may not be done just seeing profit taking, if not some more selling. So right now we're in that little no man's land, and I have some support numbers for you here. So we closed at 26,067. We've got support at 26,000 even, and of course we're through that. Our next support really is all the way down at 25,890. It's a good ways down, but we can get there very quickly. And if we look at the lows of the day today, they are 25,523. So we are through that, and the next is 25,778. So we're through that. So we're through a lot of the short-term support that the Dow expected to hold. Right now, our next support really is 25,000. So a good bit lower, but again, so far lows of the day today, 25,523. Another 500 points is a drop in the bucket, given the way the market can move. So Dow Jones Industrial Average, and we look at this down here, this bottom of the channel. If we come down here, we'll have broken through the 50-day. We're still below the 200, and this is 24 according to this channel marker, or this lower bound of this sideways action, 24,896. So close enough. We'll call it close enough to 25,000. It's usually some psychological support at a whole number. So 25,000, we break that, and it wouldn't be surprising to see the market come down and test 24,896. So we're not there yet. And we, as far as the day goes, who knows? We could end up a good bit lower. We could end up higher on the day. That's kind of exactly where we are. It's certainly got a risk off feeling to the day, that's for sure. So I'll have a quick look at SPX. Take a look at the S&P, say how it's doing. And we talk about this all the time. Again, we've got a similar picture here. We extend this line here, the lower channel here. We've got pretty much, we're in this sort of no man's land here also. The good news for the S&P is it's trading above its 50, above its 200, and above its 20. The bad news is it's hit resistance up here, and it's got additional resistance. If it can break to the upside, and we would certainly can, it'll get back into this upward channel. So that would be a nice move. We're going to see resistance at 3,000. We'll call it 233 thereabouts. So the old highs, that's a big resistance point for the S&P. And a lot of analysts have been worried about that in the past, and we'll see again if we challenge that. And if we do, what happens? It'll be quite optimistic, and there'll be a lot of technical analysts who will buy that breakout. So that remains to be seen whether or not we get the breakout through that resistance. But so far, haven't challenged it yet. Now, NASDAQ Composite, just nothing to worry about. Just moving up in its channel, no big deal. Just hitting it out of the park. So the NASDAQ Composite is not going to be any kind of bellwether for the markets. It's going to be the Dow and the S&P that we're going to keep an eye on, because those are going to lead the way down. And the NASDAQ, if it falls, and it falls hard, then guess what? All bets are off. The ball game that we've enjoyed is over. But what are the chances of the NASDAQ falling out of bed? I would say slim at best. If it does happen, then we're in trouble, folks. We're in big trouble. Let's have a quick look at some of the stuff you guys wanted to take a look at. I'm going to start off with SPXL, which we're talking leverage funds. So we got, and Shelly, this is for you. We got a leverage 3 times bullish play. If you like the market here and you think it's going to reverse, and you got in already based on that, then okay, hopefully it'll work for you. But what you want to do is If you get a run back out today, fine. And a lot of folks will take a look at something like this and at a bullish leveraged, and they will buy puts. I like doing that. I like buying puts on a bullish fund like this. So if you bought puts on this, or if you shorted this, then again, because it's leveraged, if you get a few days in the direction you want it to go, whether you're long it or short it, and it's going in your direction, which side of the park you're playing on, just take your profits. So that's what I have to say. But I don't see anything here in terms of it breaking down. It's still above its 20-day. A lot of nothing. It's hard to tell from here. What I don't see any indication of what this fund is going to do right now. So interesting, but unfortunately, no indication based on the technicals of is there something about to happen. And we got the bear counterpart. Again, same thing. Now, this looks to me more interesting in terms of, do I want to buy this if I think we're heading lower? At this point, if I was bullish, I wouldn't be buying puts on this. Is this not? There's nowhere for it to go as far as I'm concerned. Really, I'm not going to make much out of it. However, you look at some of these. We go back here. We look at some of these moves here. Look at these moves. Wow. I mean, if you caught this, somewhere here even, and you're bearish, and you get this kind of a move, again, once you get this reversal here, you probably should have taken your profits. You come back here, you get some really nice moves. Your little, again, you get washed out right here. So that's what I'm saying. It's hard to stay in these things for very long because it's very easy to get washed out. So take your profits. If you were to get in on this bar and you have this kind of a blowout day, take your profits. You're going to have a decent profit because this is a day trade. You don't hold these long term. All right. Me, if I'm bearish down here, yeah, I would buy this as a bearish play down here. Or if I'm super bearish, I would look at some of the call options on this SPXS and maybe look as far out as 9, 10 strike and go out as far as I can depending on the price. And if I'm super bearish, you could have a heck of a move here. If you get a 3-4 day run and you own some options, you could make some quick money there. So that's a look at those two 3x leveraged. Direction, which is a great company. They come up with some pretty neat stuff. Direction out of California. Okay, Walter asked about Costco. Let's go take a look at Costco for Walter. Up handsomely, and that's on, I believe, earnings. Again, good numbers, bucking the trend today, even better. But just look at that breakout. I mean, this is a stock that, as you can see, got hit, didn't really get hammered because it had a beautiful rising action here. The stock has been doing very well as the company's earnings have been doing very well. And of course, you got the coronavirus hit like everybody else, panic selling across the board. And what you got here is a little bit more of indecision of what is this coronavirus thing? How is it going to impact the market? And a company like Costco, and then the understanding is, people are going to start buying more stuff. And by the way, this company is still a solid company. Got a consolidation here because we're looking for earnings. We're looking for direction. And really, you never broke down here. This is very healthy sideways consolidation type move. And then you have this breakout. So really, Costco looks good. Walter, if you own it, certainly it's a handsome stock to own. And it has been for some time. We talked about the other big boxes, so I'll have to take a quick look at some of these. Again, I'm not a fan of Kohl's, and if you look at Kohl's, you just look. The reason I'm not a fan is you just look at the action in the stock. You go back, you keep going back, and it's ugly. So why would you, play a stock like that from the upside? If you want to play from the downside, I would understand why, but why would you try and catch a falling knife by betting on this? And obviously today down almost 7% today. So just an ugly day. Just trading above its 50, just below its 20, well below its 200. So again, the reason I don't like Kohl's is I don't like the way the stock moves. I'm not big on the stores either. I just not my cup of tea. And in particular, I'm more inclined to look at the stock than I am go searching through the stores and see how they're merchandised and do I like them. I go in all of them. I do look at them, but I prefer to look at the stock for my final analysis of what do I think. And if it certainly comports with what I see in the store, it's merchandising and how things are set up and the traffic, et cetera. And with Kohl's, I have found that the stock comports with what I find in the stores. Not exciting. TJ Maxx has had a good run, got hit really hard and in the COVID move. I mean, again, beautiful run. Look at this, just really great action. And then bam, it hasn't really done much. It hasn't recovered. It's had a nice move up, but stock looks a little shaky down here now. So if you own TJX, I mean, it's done so well for some time. It's just not doing what a lot of folks expected it to do. We're going to go to the big boy. And here's an example of what superb management will do. Just stock took its hit. Just absolutely soared, and that's a lot of stockpiling, obviously, and people are figuring out, let's go to Walmart and stock up. Again, we've had some of these crazy price these bars just are indicative of just broad buying. And again, we sell down here. Not a lot to be worried about. You got a bit of a down trend there, but broke out of it on this massive bar here, and we're all the way up here. We're above everything. We're above the 200, the 20, the 50. So Walmart, to me, it's a company you want to keep, you want to hold. If you bought it somewhere down here and you own it, I wouldn't sell it. Target, my favorite I like it for the dividend. Again, again, it's got a little bit of the same action right here. Nothing to worry about. We're just below the 20 and the 50, but we have this little bit of action, this sideways action here. I'm not worried about Target. I would be a little bit apprehensive if it breaks down through that support area that I just drew in green. Because that's right above the 200. If we break the 200, then something else is going on, and that's probably earnings, and we're probably going to see other related hits to stocks, and broadly speaking, all kinds of stocks based on what we're going to see and anticipate and analyze about the earnings that are coming out. And there's going to be a lot of assumptions made about the economy, a lot of assumptions being made about employment and unemployment. So as we get these earnings starting next week, we'll start it already, but when we start to pick up on them, and the banks are usually first out of the gate, we're going to get a big, broad picture. And that's going to divine trading for the next couple of weeks. Gold. Let's take a look at GLD, the ETF. Again, I wouldn't really be worried about gold trading down a little bit today. Again, it could be just a little bit of profit taking. That certainly doesn't bother me. Look at that chart. I mean, that's pretty healthy. It has been healthy for some time. Again, all of the reasons to own gold are the same. There's a lot of retail interest in gold too. So we've got no central bank is going to stop doing what they're doing. No central bank is going to stop supporting their markets, and no central bank is going to start to basically wind down any stimulus that they have put out there. It's not time for that. It won't be time for that. There will be a time for that, but it certainly isn't in the immediate future. So that bodes well for gold. There hasn't been a lot of retail buying of gold in terms of jewelry. So in spite of that, gold has done really well. That's because there's been retail traders buying it, retail investors buying gold, central banks buying gold, though they have certainly curtailed their buying as their budgets have blown up because of the coronavirus. So they're buying less, but they had been on a tear, and they may get back to that at some point. So gold still looks good. Tommy asked about WEX, so let's take a look. And we'll take a look at. All right, so short term, you were asking Tommy short term on this. I have to say that it looks a little shaky now. It's really right at some support. I'm just looking at it from a technical perspective, and we've got some support right here. However, I'm not loving the fact that it's selling down here. You're going to have to, and one of the things I don't like sometimes when we have these descending triangles, and by descending triangle, I mean you have this kind of action here, and this is a descending triangle. So we're going down and you have support. Oftentimes when a stock exhibits this kind of technical formation and breaks that support, then there's usually more selling to follow, and you got a little bit of a gap here. So I'd be a little apprehensive about this, Tommy, on the downside. Just looking a little weak, and I think if the market weakens, and it's easy for this stock to just fall down a little bit itself. Sam was asking about SKF, I believe it was. All right, great question. The banks, the financials, we got earnings coming up, and they're having a bad day, led by Wells Fargo. And we're going to take a look at the big banks really quick to wind this up. But you can see from the ultra short financials that things aren't good in the financials. And that is another reason that the market is a little bit weak today, is doesn't like to see what it's seeing in the financials. The 2009 rebound began with financials and was led by financials. This is not the case now. Now we're obviously being led by megatech, and for good reason. But everybody would like to see the financials support this rally, and they have not. So, this is the kind of trend. If we see a sell-off into tomorrow, and if we see some selling over starting on Monday, then financials are getting teed up, and you could get a little bit of a run here in this ultra short fund. Again, I am loath to hold these leveraged funds for a long period of time, but coming into financials, this may be one that might be worth holding. It's interesting call. So thanks for bringing that up. Sam, I think it was you that brought that up. Yeah, this is one that maybe is worth a little bit of a play on, a little bit of a hold, because I'm not sure that the financials are going to have great numbers. Let's have a quick look at them. We'll go down the list in alphabetical order, and we'll wrap this up, see if there's any more questions. You look at Bank of America, we're down 2.19% today. We come right down. You see, we're right down on this. I left this up here. There's your support. There's your uptrending channel. We're right down on it. We are below everything in Bank of America. And Bank of America is just absolutely solid bank, but we're below 220 and 50 and trending down, and we're coming down to this channel marker here, and we break that, but the banks may have some more to go on the downside. You look at Citi, down a little over 3%, and again, You got a descending triangle here. So we just talked about descending triangles. Is that a problem? Yes, it is. Why is it a problem? Because a lot of other traders will look at these kinds of very basic, and I like the most basic type of technical formations are the ones that are most watched, and they become sometimes self-fulfilling. Not all the time, but quite often they'll be self-fulfilling to a degree. And there we go. So we've got a little bit of that descending triangle there. Bank of America has held up well, but it looks like it's going to be under a little duress. And let's go next to JP Morgan. Down almost 2%. It doesn't look great. You're below everything, below 50, 200, obviously, and the 20. And again, just doesn't look great. Wells Fargo should be getting hit pretty good today. Down the most, down 2.36%. And we talked about this. We talked about this channel. We talked about the stock breaking down from here. And I think it's going to test down here at the 22 level. I like it. I like it more down here. Again, if for me, it's a long-term hold. And I add to my position on the way down. So am I worried about Wells Fargo long-term? No. Am I worried about it short-term? No, not if I am adding to a position on the downside. I'm expecting, we talked about this. I've said the financials are weak. I said the financials, the earnings are going to be a mess. And, but at the same time, they could surprise. They could surprise to the upside, and the other earnings could surprise to the upside. And what could happen is the market could rise. And if we start to get a rise early out of the third quarter, out of the earnings going into the third quarter, if we start to get a rise, we get better than expected earnings, and we get positive outlook from a lot of companies, and we get positive guidance, the market could going to take leg up higher, and the financials may then catch up quickly. So one of the reasons I wanted to go into Wells Fargo is for that, is if it's going lower, I'm going to add to the position because it's a long-term hold. If we get a turnaround going into the third quarter and we see economically the numbers are better, then I want to own the banks because they've been beaten up, and Wells Fargo has been beaten up the most. So I'm looking for a play like that I might short-term enjoy, but I'm not worried about it because it's a long-term hold. So that's it on the charts. And let's go back to see if you guys have any questions. And I'm going to have a quick look through the question list before we call it a day. Let's see, come to the other side here. Peter's asking, did you get time to look ETFs trading REITs in robot run? No, I did not. I apologize, Peter. I will put that on my list of to-dos. Okay, make a note for myself there. And warehousing tech. There are some on tech. On the robots, I'm not so sure about, but I know there are in the tech, warehousing tech company stuff, and servers and so on and so forth, and they've done very well. So we'll take a look at some of those next time. Okay. Let's see, Tommy. When trading TQQQ, what affects it more, the underlying stocks or people actually trading it? That's a great question. On a lot of these funds, what affects it more is the trading, short term, because these are all short term. So traders look at them as short term. And in terms of these ultra pro, this is the pro shares, ultra pro QQQ. And yes, for the most part, short term, because everybody understands what the underlying is. Everybody understands the underlying is going to move this and that. And that's why you see some of these trade at a premium or discount to what the underlying is. By premium or discount, I mean, if you see a 2x leverage fund and it's, let's say on the long side, and the underlying market is up 1%, you expect your fund to be up 2%. If it's up 2.5%, it's because the traders are anticipating that we're going to get a longer run, and they've bid it up. So that oftentimes you'll see that. So for the most part, in the short term, everybody knows what the fund is supposed to do relative to its underlying. If it's 2x or 3x, we know how much it's supposed to move intrinsically. And any addition there, that's investor trader expectation of a longer term move for the most part. Walter, you're welcome, Walter. My pleasure. Okay, Anonymous bought FNGU in the 60s and holding second half. Well, as far as taking profits, good for you. Terrific for you. This is the micro selectors FANG index 3x leverage. I mean, this is a great. Thank you for bringing it up. This is a great ETF for everyone to look at. Again, it's the microsectors FANG plus index 3x leveraged ETN, symbol FNGU. And you bought it in the 60s and you sold half. Brilliant. So, as long as we're still going up, keep holding. There's this just a great way to play the FANG stocks. And I like the fact that I think you said sold half your position. So I think that's brilliant. That's a way to take a profit, ring the register. Brilliant, absolutely brilliant. Hope you're thinking about an exit point at some point because you've got so much money on the table. Maybe I'm just looking at the chart. It's really hard to tell. With the low today is 128. Just keep doing what you're doing, but don't leave too much on the table if we get a turnaround in the market. But nice trade, brilliant trade. Sergio, HD keeps bouncing off 250. Do you think a breakthrough is soon? Let's take a look at HD. And then speaking of big box, gotta love Home Depot. I like Home Depot better than Lowe's. Its stock has performed for years better than Lowe's. I think it'll break out higher. You got a great dividend here. The stock has done very well, just rocketed off. I mean, goodness gracious, it was a buying opportunity off of those COVID crisis lows. It was what an opportunity that was. What a rocket ride back, made new highs, consolidating here. So I think, I like it. For me, if I am looking and I'm nervous, I'm out at 240. If I see it at 240 and I hate the market and I've got that kind of a huge profit on the table, I'll always go back in later. I never think about taxes. You guys, everybody should, of course, but I don't think about that. I just think about, I want to keep money. I worry about the taxes. If I'm making money, I pay the taxes. It's just that simple for me. I don't really worry about getting in or out because that's what I do. So some of you may certainly have tax considerations, and you should consider those always. However, I'm just giving you blanket commentary on this. For me, just looking at the chart, 240, and I hate the market, and I don't hate the market. But if I did, and I see this at Home Depot at 240, I might say, let me take my profits and see how low it goes, and see what opportunity I get to buy back in lower. Let's see. Okay, so Anonymous, MPWR. Let's take a look at MPWR. Monolithic Power Systems. Okay, don't know this one. I'm going to have to look it up. I'll just eyeballing the stock. Holy mackerel, winner. MPWR. Everybody, thanks for bringing it up, Anonymous. What a move. It was moving up prior to the COVID. It took a little bit of hit on the COVID, and then bam, got right back into gear, went into second, third, fourth. That's in overdrive now, and it looks like it's got another gear to go. So great run on this stock. I wouldn't even know where to get out, or just look. Obviously, it looks like it's got more to go. What I always say, however, is don't be greedy. If you've got a huge profit in something like this, and if you start to hate the market and you start to think that monolithic power is going to come down with the market, take your profits, always get back in lower. But what a nice, hopefully you own that, Anonymous. Hopefully you've had a great run in it. And if you do, congratulations. That's brilliant. Walter, okay. Yeah, Walter, you like this. Nikola Tesla. He's riding the Tesla theme, the Nikola Corporation. I haven't seen the trucks. I don't know what they're producing yet. Is this going to be another Tesla? Investors seem to think it is. At least they want to think it's a Tesla because there were so many naysayers in Tesla for so long. That the stock just defied gravity, and the more traders shorted it, the more people hated it, the more the stock went higher. The more people shorted it, the more the stock went higher. I think people are looking for something like that in Nikola, but Nikola is not Tesla, at least not yet. So it's obviously had that huge jump, and now it's struggling. I don't know. You got to keep an eye on the news there. You got to keep an eye on that. To me, it's a speculative play right now. I just don't know enough about the trucks and about what they're doing, what their time frame is for bringing out their trucks, et cetera. So that's about all I can say about that, Walter. To me, it looks speculative. Tesla's the real deal. Joe, so should I hold my SPX calls? Let's take a look. You got 31.55 strikes. Should you hold them overnight? Oh, that's a tough one. I don't know what your expiration is on those. I don't hate the market. I don't like the action today. It's risk off action, but I've liked the market for some time now because just barreling higher. The S&P is problematic in terms of it's got to break out of its resistance for me to be, for me to believe that there's going to be another leg higher. But the trend has been up. So depending on your expiration, me personally, I would probably hold overnight, thinking we might get a bounce, hoping we get a bounce. However, if we sell into the close, and then I probably would dump them. That's just the way I would trade them. I don't think the market has shown me that it's collapsed. It's certainly shown that there's some profit taking, but we've seen this repeatedly. So that's a tough call, depending if it's a short-term trade. That's the way I look at it. I look at it to see what the market starts to do at 2 o'clock. If it starts to weaken into the close, I would probably just get out and revisit a long play tomorrow, Monday, Tuesday, and take a look and see what happens. If you own them, and you do, and the markets rally into the close and we end up flat on the day or down slightly on the day, or flat, or of course, if we end up up, then yeah, I would hold them overnight for sure. But I think that's academic. You probably already figured that out. So, hey, everybody, thank you for watching, and we'll catch you guys tomorrow. Have a great day and be safe out there, everyone. Thanks for all your questions. Cheers.